Okay, guys. Once again, good morning, good afternoon, good evening, whatever else you are watching us from. I want to quickly share my strategy with you. I think I was having some times back where a few guys were having a discussion with me about that. So, quickly, I won't wait too much time. Okay, so I'm going to show you my previous entries. Now, I am an SMC trader. Okay, SMC trader. Okay, so basically, we use our SMC concept to trade. And I only trade the New York session, okay, only the New York session, right? And all my entries are in the 5 minutes time frame, right? I only come into New York and scalp New York, right? Okay, so as an SMC trader, we only buy in discount zone and we sell where in premium zones. Okay, we buy in discount and we sell in what in premium, or we buy in the fair value gap or the demand zone, or we sell in the fair value gap or the demand zone or the supply zone. Sorry. All right. So now you can see this red. Now let me first of all go back to the 1 hour. Okay, let me go to the 1 hour time frame. This is gold. Okay, I only trade gold. Okay, I think the 1 hour is not showing here. Let me go back to 45 minutes for you to just to see. Now, can you see this red sections, here, red. These are New York sessions. Okay, so I only trade New York sessions. So when you see those red frames, understand that that's what New York session. Okay, now, so let's quickly go to probably 1 week ago. Let me just take a few days. I think from here is fine. All right. Then you see how I've entered, my entries on the New York session. Okay. So now from here to here is what is New York session, isn't it? Fine. Now this is the 5 minute time frame. Okay. Now, so let me push this one to the side like this, right? All right. So this is it. Now, this one happened in the Asians and the London session. Okay. So what do I do? Now you can see here that in the 5 minute time frame, price is what? Price is bullish, isn't it? So let me put this parallel channel and draw this particular move for you like this. All right. So can you see this? So that's a higher high, higher low, higher high, higher low, and a new higher high, right? Now this new higher high give us a higher low, okay, but the higher higher did not break the previous higher low. So what do we do? That means there's a probability of price what coming down, and this is what happened. We have price coming down all the way to where this section, isn't it? Fine. So now that means that we now have what a supply zone. So let me delete the trend. Now we now have what a supply zone that is over here. So New York is about to open. If what I'm going to do is I'm going to wait for price. If price come back into that supply zone, I'm going to sell. Right. So let's see New York. New York session has opened. Let's go. Let's go. Let's go. Let's go. Let's go. Pa! It has come into what the supply zone, isn't it? So you're going to look for what an entry. You're going to look for an entry over there. Now, because if you go to the 15 minutes time frame, the 1 hour time frame, we have a supply zones also over there. So we believe that price is going to what? Reverse in that zone. So we are waiting for this engulfing candle. Okay, the best engulfing candle that will move from that supply zone. Then we look for a fair value gap and we enter. And that's what happened over here. You could see here clearly that what we have a fair value gap in this engulfing candle that occurred over here with, let me just mark it like this as a fair value gap, FVG. I mark it. I place my entry in the FVG. I put my stop loss above this supply zone. And what is my take profit? My take profit is the zone from which what price move from. And this is this zone I mark over there. Then that is it. You can see the trade that was performed clearly over here. All right. So that's what a quick win for you. Now, that's my first trade in the New York session. My second trade in the New York session will also commence immediately it hits that demand zone. I'm also buying. I'm buying because I know how price reacts in the Asians in the New York session. I don't really wait for another confirmation. I enter straightforward because I know that's going to happen because price move from the supply zone to the demand zone, and once again, price is going to move from there. So sometimes I take aggressive entries over here. Okay, I take a quick aggressive entries over here. I go long. I buy from that place. Where's my TP? My TP is in the next what fair value gap or the demand zone over here. Assuming we place that trade, put our stop loss be below this low, okay, and we put our TP there, it will take us time for price to go and hit. But definitely, we got that happen in the same Asian New York session over there. But I did not immediately enter with the how do you call it with the aggressive entry. I wait for price to what to give me a confirmation. So you can see over here that after tapping into what the demand zone, price push from that area with this engulfing candle, giving us another what fair value gap over here, right? So we have a fair value gap over here, and we also have the demand zone down there, which I can even extend the previous demand zone all the way because it's the same demand zone. And that is how come I did not enter in the fair value gap, okay, rather in the demand zone over here. You can see how I got this what 1:5 trade in the 5 minute time frame. Now, once again, now I could also look for my third entry. As I said that I have only one, two, or maximum three trades I take in what in the New York session, and I'm done. So now price went back into the fair value gap that I previously marked over here in the same New York session. Okay, you can see that price came back once again in that what fair value gap in the New York session, and start reacting from there. So quickly, we are expecting price to move from that zone. Okay, now we need to wait for what confirmation, and the confirmation has to be a break of structure, right? Which we saw over here like this. That I'm have to mark this one because this is the last higher low that went up to give us a new higher high, right? And we now have price coming back here, giving us a change of what of character, right? A change of character, very change of character, of course. And quickly we go to the upside and we mark our supply zone right here, okay, and that's where we're going to re-enter because we have our confirmations that tells us that what price is going to reverse in the what 5 minutes time frame supply zone. We put our entry in that supply zone right there. Let me move it from there so I can see it clearly. So the demand zone is marked. The price entry is in what the supply zone right there. Okay, you put your stop loss above that previous was high, and you take your TP in the next swing, which is down right there all the way. Now look at what happened. Now because we have liquidity over here that was formed from London session, let me pick my liquidity line. You see all these ones here, all these weeks are liquidity. This liquidity is here, liquidity is here, liquidity is here. So what happened in the last this particular trade that we took? Let me mark the liquidity. Where's my liquidity line? That should be a sell side liquidity. All right. Okay. So my TP was below this lows. It was at the liquidity zone. I know plus would definitely clear it, and that's what happened. Okay. So I am out. So these are my three trades where in what the in the Asian session. Okay, I don't want to give 15 minutes time frame. So the same thing occurs in all my New York sessions. You can see the next day also. This is what 4th of November. I also took three trades in the New York session. Okay, so that's it. The first one, the next one, and the last one. Okay, and let's go to the next day on the 5th of what November. I also took three trades. I bought from here from where now here there's a break of structure. I waited for the demand zone. Price came back here, tap into, we bought, we went back into the whole supply zone. We take our profit, we wait again. You can go to 1 minute over there, look for confirmation over there for sell. You come back again to the same demand zone that caused this particular movement. You buy from there, went back all the way to the up. You clear the sell side, the sell side liquidity at the top there. You are out of the market. You wait again, look for another confirmation to the downside. You wait, you see it over there, you mark it the supply zone, you went back there, you enter, and you go all the way down into the previous world demand zone. You are out of the market for that day. Guys, I will not talk too much. If you want to know more about how to trade a 5 minute time frame using SMC strategy in the New York session, you can put a message right there below and we will take you through. Right. Thank you so much, guys, for your time. Have a great evening.